when the truth dies, we're all blind. And it doesn't matter what your political
Right.
ideology is.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots. And if the backgrounds still look different, that is because I am still refusing. You know what, Chase? I've actually had the last 2 weeks marked off as my summer break. Um, and it's my goal was to not go into the office once this week. Usually that doesn't happen, just because it feels like there's something pulling you back. But I'm 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 this is my attempt at greatness this summer is to not go into the office for a full week. That's kind of a
Hey,
not.
you're 40% of the way there.
Yeah, right. I know that's and I was I only showed my face in the office 2 times last week. So that's it's like a reverse weekend, right? If you get 2 days in the office, 5 days out, I feel like that's kind of a vacation schedule. It's just the inverse of working, right?
Hey, when AI takes over the world, that's probably where we're all headed anyway.
Yeah, boy, isn't that the truth? We can jump right into it. Just so everybody knows, we're going to be a lot less focused on the indexes and the performance they had on the day because of, and if you see people walking around the background, they shouldn't be, but that's my progeny. That is my progeny who are also sharing the house with me for the summer. Um, but yeah, we're recording this a little earlier today because of some conflicting schedule conflicts and et cetera. But kind of jumping right into it, I think that we just got done with our investment meeting this morning, and it definitely looks like some signs of weakness are really starting to show up. You made a really good point as to timing, which is that's a head scratcher to me. Why all of a sudden is the weakness showing up? But it does materially seem to be showing its face, does it not?
Yeah, we have a very tactical window of vulnerability here that I was talking about on the investment meeting that has opened up. But how, whether or not that leads to something significant, just totally up in the air. But I mean, as we record an hour and a half before the close, so this could be completely different by then. But the Nasdaq's down about 0.5%, so that window of vulnerability should, it is showing up a little bit. And we talked at length in the last couple of months on the show about, hey, when they restart refilling the TGA after they pass the reconciliation bill, like that could lead to some hiccups. And last week they finally started filling that thing back up. So, and here we see at least, it's not a big deal. Like we're very close to all time highs, but we're seeing some struggles.
You know what's interesting to me that I was thinking about, especially with the timing of the back and forth between Trump and the BLS, the person at the BLS, the manager, um, which I said on an interview yesterday. And again, guys, we're just looking at the financial side of it and the investment side of it and the economic side of it, leaving our politics out of it. I tended to agree with you, where somebody was asking me, "Hey, why'd they fire this person?" I go, "Look, I, I'm not saying that that person shouldn't have been fired because the BLS's approach, as well as their data and their conclusions, are beyond reproach. That isn't my argument whatsoever. My argument is I think that that could be blamed on a whole host of things, very few of which I think that they've got control over. You may agree or disagree, but the thing that I said was I think there are a lot of things right now, especially right now. I feel like we have this conflicting way of looking at data with the way that the world has evolved. And I think that there are a lot of relationships that have not held that have held true in the past. And we've talked about it with indicators that have broken down. Um, I think by and large, the way we're looking at data is probably really outdated.
Yeah, I'm glad you mentioned this. On Friday I said, hey, it sounds like they're going to do this. I really hope they don't. We'll hope cooler heads prevail. Obviously, they did go through with it. My take on it is, like you said, you can find plenty of issue with the BLS, especially around like the birth death model and some of the seasonal adjustments. Like they could have been better at cleaning some of that stuff up. But whenever we had good print in May and June, we all celebrated it and we put out press statements about how great it is, and then we had one bad one and they get fired. Like that, it's kind of obvious it's political and it's not about data quality.
Well, hey, one of the things I wanted to bring up to you, and I don't mean to cut you off, but I don't want you to finish your answer before baking this into the cake, because that was my next point. The other thing is you're starting to see data show up, and I'm not being an apologist for the guy at all. You're starting to see data show up that make his statements. Now, do I see any data that would warrant a cut to 100 basis points or even a cut of 100 basis points at this point? No. But if we go back 30 to 45 days in time, and Trump was already beginning to launch his monetary salvos across the Fed's bow and all that kind of stuff, um, you and I spoke about it at great length, where I just said, look, it's a head scratcher. I don't see any economic data whatsoever that would justify that. Now you're starting to see some stuff roll in here. I do not, I do not bring that up to try to highlight, Trump's undefeated economic forecasting record. Okay, that's not my point in bringing that up. And if you guys think I'm being sarcastic, I am. Nobody has an undefeated forecasting record, so that's not a slam on Trump. It's more of a joke about economics. But but and then the firing of the BLS. I wonder if this doesn't point to the fact that his team was showing him internally significant economic data than was being reported, which I think was ticking him off because it made him look like he was being a rate Pollyanna, calling for lower. Do you know what I'm saying? It smelled. Now, do I think he's probably like this feels like a classic shoot the messenger kind of moment?
Of course,
But
yeah.
my bigger point is that's going to get politicized and kicked. That ball is going to get kicked all over the place. Uh, what this smells like to me, though, is that he was getting fed significantly different economic data internally. um and I'm wondering where that would be. Of course he's got insights to the economy that you and I don't have, but generally speaking, they're probably, you would think most of the time the US administration is looking at the very same data that we're looking at, right?
And they typically are. Like a lot of people have made that clear over time that they more or less are looking at the same stuff the rest of us are looking at. But like to your point, you're going to be talking to some CEOs and getting some real time information that's different. But to that same point, to me, the bad data, like to me, it was sort of like a gift. It's like hey, take this and throw it at the Fed and say, see, I told you the economy's weakening. You guys need to step in there and cut. Like you guys are unnecessarily letting this get bad. So to fire the BLS commissioner and say, no, that's fake. And then the data is actually good. It's like, well, then you can't say like, let's cut a bunch. Like it's like a weird, you can't have both, you know what I mean? Kind of thing.
Yeah, I know, but I mean, I didn't even attempt to go down that road just because, um, I mean, we've basically had, if you count the election years, which I think you should, we basically had 6.5 years of this guy. Um, yeah, I
Sure.
mean,
This is MO, right?
yeah. This is his MO, and I think part of it is just him constantly shooting from the hip. I think the other part of it is, and I don't mean this as a slam or even a feather in the guy's cap. I just think that people underestimate the idea that I don't think this guy is ever not negotiating in some way, shape, or form. And I'm not arguing that that's the right posture he should take either. I'm not saying it's the wrong posture, but yeah, I yeah, that didn't miss me. I was thinking more about, though, I wonder what economic data he's talking about. Or is it just as simple? I haven't even thought about that angle. Maybe it's just as simple as him getting on the phone with Brian Moynihan and Jamie Dimon.
Yeah. So that's a great point. And I think his conversation with Diamond may have been, you know, I Diamond has moved him on his thoughts before, so he may be getting himself a little more negative because of what Jamie has talked to him about. But who knows? Uh, all I do know is this is one of the, it's a fragile thing that they have to be very, very careful with. Two things. One, just, you never want to politicize data, because at the end of the day, the biggest reason you don't is you need to know the truth so that you can properly respond with policy.
Hey, COVID is the reason we cannot politicize
Yeah,
data,
you
right?
just have to know what's real so you can
Yep.
move on. You can ask Putin, who was probably being told by sycophants around him, like, oh no, we're going to mop the floor with Ukraine. It'll be easy. Just the classic getting bad data because everyone wants to tell you the good news so they can get a promotion thing. So hopefully whoever takes that job maybe makes some small improvements in methodology or whatever, but doesn't like, get the data in from all the analysts and go, no, do it again until it's better.
Yeah, right.
That's my fear. Same, hey, like if we get a 3.2%, inflation print next month, and maybe that person gets fired too, and then you just don't want to go down this North Korea road on data, right?
No, and you know, it's it's why I really resent the fact, and I don't mean to go off on a philosophical diatribe here, but it's why I really resent the fact that in any situation, um, I'll go from COVID on one side of it to, and I never thought these words would have come out of my mouth, but Harvey Weinstein on the other side of it, meaning Harvey Weinstein is a person that would be politically aligned with the opposite side of whatever political alignment you would give to the typical anti uh, COVID, anti the way that COVID was handled writ large by the government. That crew of people is not going to be typically aligned with Harvey Weinstein. As a matter of fact, they're going to be kind of the opposite pole, right? But when and I don't want to get too into the Harvey Weinstein thing because I'm not an expert at all. What I was shocked though is to learn some of the things that were done in his trial and some of the ways his situation was handled. And it scared the living daylights out of me because for the same reason that we were talking about with COVID, um, when the truth dies, we're all blind, and it doesn't matter what your political
Right.
ideology is. And what I think is one of the most scariest things in this country right now is how many people take the opposite view, which is the truth is malleable in order to accomplish our political
Right.
aims.
Yeah. Ends
And
justify the means, to like, which is, the worst kind of thing to think, but
yeah, no, yeah, and this is why, again, I don't mean to go on a political or philosophical diatribe, but I think that's where, regardless of where the truth ever takes us in any situation, and like I said, I think COVID is a perfect example of this. And the reason I like to use COVID is because it's a virus, right? Meaning, COVID nor the way that COVID was created, I think, had anything to do with politics. um did it have to do with scientific mismanagement and misconduct? Looks like it could, looks like it did, probably did, but not a political thing, right? The virus
right.
didn't care who he voted for. um and you see what the cost of that has been to society, and it's been big because you would now have irrefutable evidence of looking at your government and saying, I don't know that I can trust those numbers, not because I heard it from some kook on InfoWars, right? But because I have personally discovered your numbers to be nonsense.
Yeah. Or and you see this in the polling data, like trusting government being so bad. You go back to, the Iraq war and the fabrication of intelligence, essentially things like you just keep, like a lot of the stuff that went along with that, like you can't keep, having grenades go off where you just go out of your way to make sure that people lose trust in you. Like the consequences are just too big,
Yeah,
way too big.
yeah, and I think it's the other thing is a democracy in the way that we've come to know it and the way that we've come to define it cannot function in an environment where we don't know the truth and that the majority of the people do not accept the truth as such, right? Like you just cannot have. It just doesn't work. It just doesn't work.
Yeah,
You
exactly.
you have. You have to have a certain level of societal trust for a government to work. And I think that's one of the things that concerns me the most is that societal trust as like I hate people. We've never been as divided. That's not true. We've been more divided.
We had a civil war.
Yes, yes. What I would say though is that the philosophical gaps between the two sides at this point, I think, are as wide or wider than they were then.
Well, to me, the biggest distinction maybe is we've never been so tribal. Like I feel like
Yeah.
if you had so like if we went back to Spanish flu, I maybe I'm wrong. Maybe I could study this and I'm wrong, but like I doubt like the parties turn that thing into like let's have a holy war over a virus where like if someone I disagree with says something, I have to take the other position and make it my religion like for a couple of years, like you know what I mean, like that. And we do that with every, like we talked about yesterday with like an ad about jeans. An ad about jeans turned into a holy war between the two tribes, and like, but we just do that with everything, and it could be something that's not political, like a virus, like jeans. But then like once one kind of messenger from the other tribe says plants a flag, then you're like, oh well, here we go, like let's fight, because if you're gonna plant your flag, I'm planting mine. So like
Oh yeah.
if
No, 100%. And that's what's so scary to me is when that type look, that type of thinking is completely understandable and to some degree can be useful and productive when it comes to political disagreements, right? Meaning, and when I say a political disagreement, hey, we want to get the economy kicked up another notch. How should we do that? Via tax cuts or, towards corporations or tax cuts toward the middle class, right? That is something that warrants a lot of debate. That's a political debate, right? When we're now having political debates about some of the ridiculous stuff we're having political debates about, that's and I love the fact you use tribes because I think it's a perfect analogy. What you really then have is you don't have a breakdown in communication, you have a breakdown in language, right? Because not only are you different tribes, but you speak a completely different language. And what I mean by people like they both speak English, well, of course. But what I'm saying is you're looking at issues from completely the opposite side, and neither side is trying to understand the other side's perspective or trying to even understand that there may be another perspective. You know, like I think this is a perfect example. You had a lot of people on the left who earnestly believed that if Trump was elected, that you would have gay and transvestite or transsexual people put into concentration camps of sorts, right? On the flip side, you have people on the left that think that Sydney Sweeney American Eagle campaign, ad campaign, was a dog whistle for Nazis. Those, if you are on either side of that debate, there's zero chance that you're going to have a productive conversation or a productive back and forth with somebody in the opposition.
yeah, it's just to use Tim Urban's lingo, it's low rung thinking. It's letting your like that inner survival instinct, like animal in you, get into the information sphere and drag your thinking down to the lowest possible rung, where you attach your own survival to being right in a political debate, and that's where we've gotten with people.
Isn't that your amygdala, or is that how you say it? Your
Amygdala, I think is what you're,
amygdala,
but I can't
amygdala.
remember.
Yeah, yeah, something
I've
like that.
I've brain dumped which parts of the brain do which so many times.
Yeah, well, I mean, it doesn't come in particularly useful to our profession. So you got to clear space on the shelf for the stuff that really like charts, patterns, right? Things like that.
That's
I
about
get it.
all that's left up in my noodle.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate and actual performance may differ.
Okay, so pivoting back on the investment side, um, other than some of the economic news that we've gotten out today, um, taking a pull back and looking at the broader side of this, what do you think we're seeing here? I mean, to me, um, the evidence or the data coming in that represents a slowdown and shows things kind of slowing down a bit. It seems to me that that'd be directly attributable to tariffs. The one thing that is concerning to me is that, and I'm not an expert on the way GDP is calculated, but I would seem to think this would have a pretty big effect. When you consider the unprecedented amount of capex and investment that is currently going into AI, I would think that a lot of these economic output numbers and GDP numbers and estimates and all that kind of stuff, if they look bad, we kind of need to probably handicap that number a bit because, and I could be off in my thinking here, but if they look bad, it would assume to me that whatever number we're seeing has got to be looking a little bit better than it otherwise would due to the unprecedented levels of capex going on, would it not?
Yes. In fact, I think year to date, AI capex has contributed more to GDP than like household consumption. So the fact that you're in a slowdown despite that is a little. It's 2 quarters so far for the year, so you don't want to like freak out, but these 2 quarters have been a lot slower than 2024, 2023, 2022. Despite that, and the best way to look at GDP to me right now, and I did this today just for myself, it was to strip out the net exports because the trade stuff's been crazy both directions. You had the biggest subtraction and then the biggest addition ever from net exports in 2 quarters in a row. And then stripping out like inventories because it gets drug into that same thing. And if you do that, you see like, oof, like 25, not recession, not negative, but it has slowed a lot. And then, the personal consumption numbers you see, like it's slowing, real income slowing, like, so the slowdown is very real, but at the same time, we're growing at 1-ish, 2-ish, 1.5-ish, still positive. Like the jobs market, when you throw in wages and hours, like still pretty solid. Like it's a labor market we would have loved in 2014 or something, So it's not like we're in a recession, but at the same time, you look at manufacturing jobs, construction jobs being kind of negative the last 3 months, and you start to see like, okay, well, these cyclical sectors are saying like you could, have this turn into something more. I think that requires markets down to like hit that high in consumption, like to really get there. But that's very possible. You never know.
Yeah. One other one that that I did notice, and I'll be honest with you, it kind of bummed me out, was the quarter that Palantir announced because that was pretty impressive. Believe the growth rate accelerated just shy of 50%.
Yep, 48.
Yeah. So, but here was the thing, and I thought that this would, like I said, I was sort of disappointed. What do I mean by that? I meant that the growth that they're throwing up doesn't surprise me at all. As a matter of fact, you and I talked about when the earnings multiple started going parabolic. We're like, yeah, this is reflective of the idea that this is going to get deployed across a lot more government agencies. It's no secret out there. I'm not making any news here when I say that, when governments or when companies start tapping into government contracts, and especially if they're saving the government money and making it more efficient under this administration, that's probably going to be, they're not going to face a lot of headwinds in their business. The reason it bummed me out is because, once again, does this change my feeling on Palantir? No. Why? I don't really care what the growth rate of something is. When you're trading at 105 times revenue, you know what I mean? Like, and I love the company, man. I love the product, their success. You talked about it. You were a guy that's used it years before. The success they're having, it doesn't surprise us at all, right? But there is a valuation where you reach a certain point where, if you want to take a flyer at something or you just want to make a straight bet out of it, okay, but know that's what you're doing. And the same thing that scares me about a company like Palantir, quite honestly, scares me about a lot of cryptocurrency. And that is, I cannot look at you and discount the fact that on any number of headlines or pieces of news that come out, it could change that market valuation of that company or that security by 50, 60, 70%. You know what I
Yeah.
mean? Like,
For me, I just never want to own anything that valued the way it's valued. I just don't.
no.
So no matter how awesome they are or bad they are, it's just in the no point in really even looking at it. To me, like,
No.
that's where it lives.
Yeah, no, and the reason people are like, why bums you out? Yeah, because I really like the company and I really like what they do and I really
Yeah,
like the products.
bummed out that it doesn't trade at a level that makes it viable to be in it.
Yeah, 100%. And
And it's not like we're
then I
out here
think
only buying things at 5 times earnings. Like we're willing to buy stuff that has
yeah,
some like sport to it, but
but we've got to be able to put pen to paper and like
yeah,
be able to make some type of rational projection of saying, okay, if we pay this at this price today, what does it look like discounted down
right.
I mean that hasn't mattered for a while, but yeah, I've got a pretty good suspicion that it will again at some point. And that maybe we're not too far from that. um Anything else on the earnings side of things caught your eye?
No, not really from earnings of late, especially. But on the data side, we got both ISMs in the last week. Both were pretty bad. Both had really bad employment numbers inside of them. So, um, and that's getting. And and I don't want to overweight ISM. I don't want to overweight just about anything that's survey based at this point. But that was, that's concerning for sure. And this morning we got the services ISM, and the prices paid on that thing was the highest in 3 years. So you're getting both. You get the inflation and the slowdown, which I keep saying, like the stagflation, like red flags are just everywhere. And to me,
Yeah.
it's because tariffs. I mean, it's just like stagflation in a bottle. Like of course, you're going to get some.
Yeah, regardless of what the end effect of tariffs are, you would looking at tariffs and just I feel if you took this like first year economic students, with very few models said, "Hey, what do you think the impact of tariffs are?" I think they'd probably come back to you and be like, "We think it's stagflation." You know,
Right.
because it injects uncertainty, which slowdowns investment and lifts prices at the same time.
Yeah.
Yeah, I mean there's your stagflation right there.
Yeah.
Um,
It all makes perfect sense from just a basic first principle standpoint that if you take a manufacturer and you increase their input costs, they might have to raise prices, and they might have to let go of some employees. Like that's all pretty standard 101 type stuff for sure.
the other thing, have you heard our old buddy Elon Musk talking again? I heard him in a video the other day. He's back talking about robots. For some reason, he hasn't really been talking about full self-driving or anything like that. But he's back talking robots, and he was talking about 1 billion robots a year creating about 30 trillion in revenue annually.
$1 billion a year.
1 billion robots a year. And I just thought, boy, that seems like it. I mean, I guess if you include like nano robots in there eventually, maybe.
Right. If that includes every kind of robot ever, including like robots that help robots or whatever, like maybe. But
Yeah.
if we
Anyway,
live in that world, we're all doing a lot better. That's all I know.
yeah, my point in bringing that up is still to the Tesla investors. Boy, I'd be really careful here. Looking at that stock, trying to hold in there with this economic news coming down the pipe. Just like if you're questioning whether it feels like a good idea to own that thing right now, I would just kind of point to the economic picture that was 6 months ago and look at the performance of the stock. When a company's sales are decelerating pretty much the world over by 10% or more, and much higher than that in significant markets, if an economic slowdown is around the corner, I doesn't typically make those issues better.
No, he needs to
Like
sell a
that's very non.
billion robots next year to make this thing make sense.
Yeah. Gosh, I would still, and again, with that, nothing with that stock would surprise me. So certainly not a recommendation. I just know, man, I just know there's still a lot of Tesla folks out there that are probably still sitting on really big gains and looking at this thing thinking, and I could see the justification for it, looking at this thing thinking, 1 trillion 800 billion, that's kind of the bottom for this thing. Boy, I don't see that. I continue to see that as a company that's in really big trouble.
Yeah, and even on robots, like if you think they're getting creamed in self-driving cars, like why would you think they're going to beat China in robots? Like is something that I could never understand.
Yeah,
Now, might they dominate the U.S. market because the U.S. puts up giant walls of protection. Sure, that's possible, but
That ain't a big enough market to support $1 trillion market cap.
no.
No, I mean, it's just, it has to be. And the same with the car business. That's one of the things I was sitting there telling some Tesla bulls that the other day. I go, guys, it doesn't matter what you do here. The investment of that company, that company does not work as a select market high end auto retailer. It just doesn't, that's not the structure. The investment footprint is too big. I mean, it would collapse on itself.
Yeah.
And Musk has said that. I don't understand how you, yeah,
So speaking
yeah.
of something I talked to Perplexity to about on the way to work the other day, and kind of caught me off guard was there are actually some some Chinese automakers like building cars in America, and I didn't realize that like it was already a thing. But like Geely, the one that is making the cars for Waymo, like they're
Mhm.
building like a plant in Arizona, and I think they have one in like South Carolina. It's interesting. Now some of these are like majority owned by someone else or whatever, but like you have Chinese vehicles rolling off the production line in the U.S. So like this competition for the Teslas and everybody of the world could get that much more intense if that trend were to persist.
Do you think that market, do you think that market has to be a one take all in the sense that, eventually if you shoot down the road far enough, eventually all of these full self-driving programs are going to need to be able to talk to each other, right? Because eventually, I mean, I think the unavoidable eventuality in this whole full self-driving thing is cars going down the freeway at 80 miles an hour with 12 inches separating them, right? Because they're all locked into the same same system, and they're talking to each other. um what do you think's more likely, that becomes that's a winner take all market and one system begins to dominate all of that and everybody defaults to that, or there's an interface system and allows all of the different programs to plug into it?
I think more the second that it
Okay.
turns in like that. Yes, they all use the same kind of rules of the road for the system, but it doesn't necessarily mean like one firm has to win that battle, but that they all rally around the same basic way of doing things.
Like different computer makers all using Microsoft software.
Yeah, something of that nature. I don't even know if it necessarily means like one company has to really win that. It depends
Right.
on the regulation. Like at the end of the day, we all use GPS, in the same
Yeah.
way and stuff. But and it depends on how it evolves, like how much it talks to each other. Is it just like a beacon to be like, hey, don't hit me, or it like the way like it is in an airplane, or is it you may have to get complex enough to like where there's a system so they know how to slot and queue with each other and everything. Like zipper in on an on ramp that's a standstill or whatever, like where they can make it all make sense. That's one of the things I always worry about. Like think about is like whenever you have a line of cars trying to get in with another line of cars, a proper gentleman zipper effect. Like one goes, then one goes, then like not two, because like we live in
That's
a
because you're
society.
civilized. That's because you're
Yeah,
civilized
but
and
hey,
you're not an animal.
that would be beautiful to have that just in the code of the car to be like, all right, your turn.
From your lips to God's ears, man. When people do not abide by that, I literally, I am not a guy that throws obscenities and certainly not obscene hand gestures out on the fair. There are very few things that tempt me to other than that.
Yeah, it's just like
You
the
know,
airplane. Like middle seat gets both armrests because
100%.
over there you got a window, over there you got an aisle. So the least you could do is give them both armrests.
Yeah, be a civilized human being for God's sake. Anyway, well, what else the one other thing wanted to discuss. I find gold at a really interesting level here, just because it really looked like we were going to get that retest to that 3,000. Yet at the same thing, I don't see anything in the chart or in the news that convinced me that that's off the table. Yet here we are. Boy, it sure is acting. surprisingly stubborn, at least from my vantage point. What's your take on the way the yellow metal's been holding up?
Yeah, I mean, we've gone sideways since April, so I think we're kind of correcting in time, not in price. And that, it may just continue that way, where like you just kind of go sideways for longer than you expect. I think you're like I keep expecting more of a breakdown, especially last week. Like we started to like show on the chart like a what looked like a real breakdown, and the next thing you know, you're like
Yeah.
right back. But we got the more political volatility with some tariff stuff, with the fighting with India over and China over Russia stuff, like firing the BLS commissioner, like all that kind of stuff. I think helps gold perk itself back up. Um, the bad jobs data absolutely helped as you started bringing forward some rate cuts and stuff. But it's still like we haven't put in a new high yet. So, and if you look at Bitcoin, same thing, kind of flat for the last few weeks. Can't like really break down or really break higher in a meaningful way. It all these like liquidity proxy assets, especially, like it's just turned into like a sideways the last few weeks thing. Which, I mean, I guess it kind of makes sense. Like you see a slowdown, you see inflation not fully cooperating to the downside. I think it feels like me as an investor, like I feel like I'm sideways for the last few weeks because I'm like, I don't know what data is most important now, and I don't know how the other players that are playing the game are going to react to some of the like different data that we're going to have. Like I don't know what matters more to people, inflation or growth. Like I really don't, and we're going to have to find out. And I think it's the same thing for gold.
Well, look, I again, I could end up being well, most likely will end up being very different from this. But I continue to think that at least for now, sort of the inverse of the last 12 years is probably a fairly decent lens to look at things through. And in that lens, you had a low growth world with a low rate, the lowest rate of wage growth in any recovery in history, at least here in the United States. So in that environment, I think investors are initially going to think that they want growth. But when you look at the way a lot of growth assets are priced, um, I think it's going to be the inflationary assets and the inflation side of it that ends up, taking the day. Kind of, it's kind of funny because I would not at all be surprised if the road ahead looks quite a bit like the last 12 to 16 months, where you have these periods of times where maybe you push to new, gentle new highs on some of these tech companies. But by and large, the market continues to underwhelm. Meanwhile, you have kind of the inflationary assets continuing to really outperform on the other side of it. Um, but I mean, anybody's take in this crazy environment is worth listening to. But one of the things we talked about, for what it's worth to the listeners, is when you get in times like this where the road ahead looks really cloudy, I think the best thing you can do is get your portfolio down to your strongest conviction plays, stress test all of those plays repeatedly, and get yourself to the point where you're either ready to sell it or you're so convicted that you see a 15 to 20% pullback as a gift. You know what I mean? And then whatever doesn't fit that criteria, sit in cash or some short-term hedges or something like that, and let things come to you, or let the data in the market prove to you it's not going to take a rip higher. I wish you could approach it more in a completely fundamental viewpoint. And I think in the past, that would have been probably a more appropriate way to view it. But, again, like we've said a million times, the last 15 years, if they've taught you anything, it's that you have to be, and guys like Stan Druckenmiller would say that's always been the case. I just don't think it's been a mainstream way of looking at things. But I think if you're not baking into it, macroeconomic uncertainty, and even more importantly, fiscal and monetary, actions and policies, I think you're going to be probably way off course, just like you would have been over the last 15 years.
Yeah, I think macro becomes just a more important part of this, and policy analysis both, just become a more important part of investing every day. Like you can do some bottom up work and it can still be very helpful, but like if you get the macro wrong, you got a problem. You know,
No,
you
you
have a
know
big
what?
problem.
Yeah, and I honestly think if you're going to ask me what is the biggest surprise that new or kind of neophyte investors are going to deal with over the next 10 years, I think it's that. I think that the last 15 years has convinced people that macro is dead and it doesn't matter. Where I think what the last 15 years, I think what they've showed me is that in a world of no constraints, right? Meaning when inflation is not a problem and the biggest and most wealthy economy in the world is completely liberated and unshackled to print money at writ large, um, you want to be around that or near that spigot, right? Like just period, because the only way to end that, it's kind of a world of no gravity, right? We referred to ZERP so many times. It wasn't just guys like you and I, but kind of like financial zero gravity, right? Well, inflation again is sort of the opposite end of that spectrum, right? It is a constraint. It is a constraint that necessitates government actions, right? It's sort of like in a chess game, there are moves that you make because you're setting up certain things, and there are other moves that you make to make your opponent make a certain move, right? um when you get an inflationary environment, inflation kind of acts like that opponent, right? It makes certain things happen. It makes certain markets unaffordable to transact in. It makes certain markets undesirable. It kind of injects a sense of limits and a sense of reality back into the system. And I think that's going to be a thing that really catches people off guard. And I think, and I hope part of me is part of me is obviously talking our book, but I think the markets are showing us this. It doesn't feel like just a prognostication at this point because I think policy is pointing in the same direction. But I think a source of some big time alpha and might be the only significant source of any meaningful outperformance for quite some time is gonna require macro.
Yeah, I it's been my area of focus for a long time for a reason. I just reached the conclusion that not only was it important when I started, but like it just would get more important as time goes on. You think about like talking about inflation and what it can do. You know, I think a lot of people are going to have the playbook of like, oh, well, the '70s, that's what it'll do. Like you have inflation and you raise rates a bunch, and then that hurts stuff. So you better get out of the way. But what might get this time is like, yep, inflation's here, but instead of raising rates a bunch, we can't because of the constraints that if you study macro hard enough, you know they're there. So you get inflation and you don't get the corresponding rates moving higher and tight policy. So then you kind of get that, weird supernova of inflation and in some asset prices that gets real tricky for the average investor to deal with.
Yeah,
Not to
no,
mention the
it's
global implications of where capital can flow and all that kind of stuff.
yeah. Now I will say this though, it really excites me because like we've talked about again ad nauseum, because passive has worked so well, because tech has been so unstoppable, all the different things that we know. I think that there's so many assets and so many different companies out there that would be, traditionally attributed to or thought of as companies that work in a macro driven environment. So much of that stuff is still so bloody cheap. You're seeing it in the gold. That's another thing to point out. We talked about with gold, and we'll get this wrapped up quick, is that one of the things that we were saying is that we thought because of the mass undervalue you saw in gold miners, which is still there today, that you might see a period of time that would confound a lot of investors because for so long it has been if gold is up, miners will be up moderately more than gold. If gold is down, miners will be committing seppuku and killing themselves, right? Um, and what you're seeing now is we've seen multiple. Now again, it's I don't think it's enough to call it a trend, but we've seen multiple scenarios, multiple days, multiple periods of time where gold has been flat or under pressure or been outright negative, and miners are breaking out. Today, I believe you got both indexes for the miners, GDX and GDXJ, flirting with all-time highs. Do you not?
Yeah, they're dramatically outperforming the metal. Like today, this
Yeah.
month, the last couple, like you are finally seeing an environment where it's like, well, gold's flat the last 3 months, but miners are not. Miners have such good earnings and margins and stuff that they're not. And despite that, what's interesting is if you look at the share count, share creation for GDX, GDXJ, like nobody wants it. Like it's a market leader that has net outflows. Like it's pretty wild.
It's because because it doesn't go up 30% in a day.
Yeah, I mean,
I mean that, people think that's investing. I mean, if you look at our clientele base is much more sure-footed, much more foot on the ground. I mean, name
big
of our
time.
radio
Yeah.
show, Know Your Risk podcast, right? Much more laid back. I've fielded several comments and not being ridiculous or whatever, but kind of alluding to the fact of, well, can't we play in the space of the stuff that makes us 25-35% a day? And just going, no, guys, because the reason it's moving that much for the most part um, is for idiosyncratic reasons that have nothing to do with investing, right? So to play that game long enough is to get zeroed out, you know?
Yeah, yeah, exactly.
Um, it just is what it is. Now, and it doesn't mean you can't take shots at it. Like we said today or yesterday, we had a small position of American Eagle out there. Notice I didn't say it was our biggest position, our strongest conviction, right? It was a small position. Would be nice if we won, but wouldn't hurt us if we didn't. And but I think that in this environment, looking at the things we're up against, um, it is not the kind of environment. I think a lot of investors feel a lot of 2021 vibes right now. I just I kind of honestly see it as sort of the opposite of that.
Well, I mean, 2022 came after 2021, and I think you could, because there definitely are those vibes in a lot of stuff this year. But if you look at like Michael Howell's global liquidity work, he basically has it pegged for the down slope of the liquidity cycle to be next year, 2026, and
Really?
you'll probably go into that with a bunch of people really, really over their skis, having reconvinced themselves that they can't lose, and kind of all those prerequisites where you start getting global rate hikes or whatever, and things of that nature, or just some the growth slowdown from global trade problems or whatever, like being enough. And next thing you know, boom,
Yeah.
most global markets are down 20%.
Yeah. No, I'll tell you this. I certainly, it does not at all feel like an environment to me where you should be, taking shots and speculations and stuff like that. And if you want to take any shots, I think you should be very careful to make sure that you've got some sense of financial or fundamental grounding to it, because
Yeah,
like I said, there's just so many of those things out there. Whether you love the company, don't love the company, all that kind of stuff. When you look at things that are trading at 70, 80, 100 times revenue, it doesn't matter what the underlying assets are. You have to acknowledge that that is something that can and typically does have periods of times where, at the very least, 50 to 60% of that market value just evaporates, and usually does so in a pretty quick period of time. And no, I do not think Palantir will be the one company that bucks that trend. It hasn't yet, right? Meaning it's had the big runs, but the nasty pullbacks too. So yeah, just it's certainly not the environment where I'd want to be messing with that stuff.
yeah, totally agree.
All right, pal. Well, hey, I appreciate it. And you guys, thank you so much for listening. We will be back as always tomorrow. Make sure you tune into the social media pages. Look for us on YouTube, Know Your Risk Podcast, pretty easy to find. Also, knowyourriskpodcast.com. We will be back tomorrow. Have a wonderful evening. We'll see you then. You're listening to Know Your Risk Podcast. Download and subscribe to knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.